Okay, let's dive right into this explainer. Today, I want you to put on your executive hat because we're going to treat you like the CEO. We're going to completely demystify the exact blueprint you need to build a prompt-driven proprietary trading platform, literally from the ground up. So if you've ever wondered what it actually takes to construct one of these massive financial engines behind the scenes, well, you're in exactly the right place. We're going to look at this process like we're building a digital skyscraper, following a sequential journey through 6 critical phases: the platform foundation, the signal and rule engine, connecting to real markets, the human element, testing and scaling up, and finally, the compliance firewall. Phase 1, the platform foundation. Now, as the founder, your absolute first task is hiring the expert construction crew to lay your digital groundwork. You simply can't build a professional platform with amateurs. You need a team that already knows this space inside and out. We're talking software architects to map out the big picture, backend developers to build the heavy lifting engine on the servers, front-end UI developers to design the intuitive screens your traders are actually going to use, and of course, DevOps engineers to ensure the whole thing is secure and running flawlessly. But listen, your crew's first job isn't to just start blindly coding. Their early milestones involve defining your architecture, choosing core technologies, and producing detailed technical specs. They need to map out exactly how your strategies, risk rules, user management, and broker APIs will all eventually connect. This foundation literally dictates whether your skyscraper stands tall or, crumbles under pressure. Moving on to phase 2, the signal and rule engine. Welcome to the engine room. This is where your quant developers and platform engineers step in to translate abstract trading strategies into hard-coded, unbreakable rules. It's a fascinating workflow, really. You take a proven strategy, convert it into a coded signal, package that into a clean data bundle, and push it to the trader as a simple on-screen prompt. The whole sequence ends with a human click that fires the trade off to the broker. The entire goal here, taking massive algorithmic complexity and distilling it down into one simple, actionable prompt. But here is the crucial point: accountability. This engine must log absolutely everything: who clicked, when they clicked, what they clicked, and exactly what happened next. Honestly, even non-clicks have to be logged. This backend tracking acts as a mandatory report card for regulators. Plus, it empowers your system to enforce no trade windows and execute automatic lockouts the very second a risk breach occurs. Right, let's hit phase 3, connecting to real markets. Having a shiny engine doesn't mean much if you can't put it on the road, right? Your integration developers and legal team will need to collaborate closely to choose the right venues. You might look at Forex.com for spot FX, Oanda for reliable data, Interactive Brokers for multi-asset global coverage, or Tasty Trade for US futures. And the vital legal distinction here is that you absolutely must open proprietary trading accounts for your firm, not client advisory accounts. Once those accounts are open, your tech team has to aggressively test your broker API connections, specifically market data ingestion, order routing, and account data retrieval. You have to validate that your beautifully coded strategies actually behave correctly under live spreads, real-world slippage, and crazy volatility. Because let's face it, the simulated world is perfect, but the real market, it's messy. Your connections have to be flawless. Which brings us to phase 4, the human element. Here, we shift focus from the mechanics of the engine to the driver holding the steering wheel. This is where so many tech-heavy firms completely drop the ball. You aren't just hiring coders, you need brilliant UX designers. Their job is to study human behavior and design screens that make it genuinely hard to make a mistake. Clear prompts, obvious risk warnings, limited choices. On top of that, you need trainers and coaches. Humans panic, it happens. Coaches are there to manage trader psychology, teach them how to respond to drawdowns, and prevent those dangerous off-script actions during stressful market events. All right, phase 5, testing and scaling up. You've got your system, your market connections, and your traders. But before you go large scale and risk massive capital, you absolutely must stress test the entire machine. How do you do that without risking the firm? Through a very cautious, deliberate progression. You start internally with simulated data and paper trading, then you step up to a controlled pilot program using real firm capital across a small group of traders. Only then do you move to a progressive scale up. Throughout this entire phase, you're constantly using behavior data and risk reports to refine your prompts and adjust your risk limits. Finally, phase 6, the compliance firewall. This might just be the most critical structural component for your long-term survival. There has to be a strict legal, physical, and digital separation between your education arm and your live trading arm. We're talking separate legal entities and separate brands. Roles absolutely cannot cross boundaries. Your personal finance coaches in the education entity must never, ever make securities recommendations. Meanwhile, your trading supervisors and risk staff live solely over in the prop firm entity, strictly monitoring prompt adherence. And this matters immensely because in this business, control is just as important as speed. You have to implement centralized compliance monitoring. By using centralized scripts, you ensure that the language used by your staff around trading, debt, and personal finance stays strictly within regulatory boundaries at all times. Guys, a single rogue comment can literally bring down the entire skyscraper. To sum up this explainer, I want to leave you with this CEO checklist. Checking off that your architecture is approved, your signal engine is working, broker connections are live, UX is integrated, the pilot is completed, and you have full education and trading separation, that represents your complete path from a mere whiteboard concept to a real firm-built trading platform. It requires flawless execution from the architecture all the way down to that ironclad compliance firewall. We've laid out the phases, the risks, the human elements, and the exact infrastructure needed to pull this off. You now hold the blueprint and the checklist in your hands. The path is crystal clear, but as always, execution is everything. So, I'll leave you with one final thought to consider for your firm's future. Now that you know exactly what it takes, are you ready to build?